Happy Friday, Pat.
Hey, buddy, how you doing?
I'm glad to hear you're doing better. I know you said you had
Oh,
some cold and flu symptoms and stuff, and I
yeah,
thought,
last 2 weeks they come and go. It'd be good, crappy for 2 days, go away for 2 days, and then come back. And last night I had the chill. It's just been crazy. Yeah,
that's
frustrating.
it's good to have you back today. I didn't want to have to do this with
With
um,
the stick pat.
Pat on a stick. Yeah, actually, one of our YouTubers, I think it was actually YouTube. No, I don't think it was her. It was they called it McStick.
Mixed stick, yeah.
And because this is I don't have my overlay up there. What am I thinking here? This is the Mick Report, McHone and McMasters, where we go over the numbers for Arizona, and it defies logic right now. When you look and you see that interest rates have gone up, and they've gone up pretty significantly, right, this week. And
Yeah, it's been. I mean, for just the whole month of February. I mean, it's been. They stabilized here last. We had kind of a down day today. We had the reaction in the bond market was down 54 basis points, but now it was only finished up down 37. So we'll talk about that a little bit later. Yeah.
well, here's the curious thing, Pat, and you know how I do this 7-day moving average. I'm going to zoom in here a little bit, because the blue line is number of new listings that come on over the 7-day average, and the yellow line is number of new contracts. And the new listings took a plunge. It's not big, maybe 200 homes, but new contracts have been edging up. Now, see this little gap right there? It's
Yeah.
only 31 units, which the last time we saw a gap like that was in March of 2021 when things were crazy. Now, that doesn't mean things are going to go crazy, but what it means is that you can't get, and I'll go to this chart here. This is the Cromford Market Supply Index, supply and demand. You can't get radical moves until you have gaps like this. See that where demand fell to the floor and supply went way up
Yep.
here. So markets crashed. So then down here, it's the opposite, right? So here's
Mm-hmm.
demand, which is the pink one, and supply was down here. So until you get really wide gaps like that, the market's just going to muddle. And that's what we're seeing on not only a 7-day moving average, but right here. You can see that this, and I'm going to see if I can zoom in here. Let me hit my control button here for a second. And the demand side, well, that didn't make any sense there. I'm going to undo that. I better refresh this one here. See, when you do things live, screw ups happen. There we are. Yeah. What I'm meaning to show everybody is right in here. See the blue line?
Mm-hmm.
That's supply. That's an index. Okay, so inventory is coming down, and guess what? Demand is eking up, and that's what we're seeing because we were running with demand at about 2,200 units every 7 days. Now we're 3,200 units, and we seem to be staying in there. Like Terry says,
Good luck in the hood.
in
So
the
true.
hood. I agree. And so, is the market brisk? Not by any stretch of the imagination, but we are seeing homes that come on to gone, when they're priced right. And it's because there just aren't that many, and there's just enough buyers out there.
Mm-hmm.
We got to go. Mandy actually made it live. How are you? So
Mandy, welcome.
cool. Here's the latest Cromford Market Index. Now, last week we saw a bunch of these were red, and now it said here that the era of leadership for the Northeast Valley is clearly over, in the Southeast Valley, Central Valley, and West are now taking over the market leadership role. Look at Buckeye. It's come up. It was in the 50s. It's now 63. But it said most cities have moved strongly in favor of sellers, particularly Glendale, Gilbert, Avondale, Phoenix, Queen Creek, Peoria, Goodyear, Mesa, Tempe, and Chandler. Boy, I'm running out of cities. As a
Yeah.
result, prices are now starting to climb again, marking the end of the correction that started roughly 8 months ago. Huh. Do you think that's going to continue? Is what everybody's asking. Seatown finally takes the lead. Woohoo. Yeah, Chandler's up there. Is that where you live, Keenan? Stephanie says, rate impact has impacted me. It's getting difficult to receive your monthly payments, to receive what your monthly payments will be. If you don't have the payment amount, how can you list your home for sale? Sad.
Well,
Yeah,
that goes back to what I've been saying the last couple of months now. You see the volatility, when you got volatility in rates, it just causes confusion amongst the buyers and sellers.
yeah, it was better when it was kind of sitting at 5.9 and just hanging there, right?
Yeah,
And
yeah,
now they're bouncing around like a ping pong ball. And the other thing too is that, look, some of these uh, born and raised, all right. You probably know you look like maybe you're my oldest son's age, but I can't tell from here. So which high school did you go to, Keenan? This kind of lags by a week or two, when you start looking at these indexes, because they're looking at closed numbers. So, while it's moving in favor of sellers today, maybe that will change a little bit.
mm-hmm.
I'm expecting it because, the last time we saw rates climbing near 7, things slowed down considerably. So
Yeah,
I think it's safe to say that we're going to see more of that. But it's just interesting to watch how it, like Billy Crystal said in The Princess Bride, not dead yet, mostly dead. After desperate sellers are done, we should stabilize. Chandler High class of '06. Oh, interesting. I could toss some names at you there. I had one of my sons, I think he graduated in '06, Kevin from Hamilton. And a lot of his friends were at Chandler High. So good class up there. So I think, as we go through and look, we shouldn't be shocked if in a couple weeks, if rates stay where they're at, that the numbers kind of start
mm-hmm.
petering out a little bit. And you are the numbers, because somebody, boy, it's all over the map on our viewers. Some of them say, I need to bet you $1 again. And, and I've routinely said no.
Yeah. Now
Not
today we
getting
had
there.
yeah, I mean, obviously we had the PCE numbers come out today, and they were about 0.6. They were just about, like, I think 0.1% higher than expectations. So, the market today, it got down a little sloppy. It was down like 54 basis points on the down 37 was down 54 at one time. So it kind of came back. We're seeing a floor, as you can tell on, right, the right. I don't know if I can. I'm not sure. I wish I had. I gotta get that red line that you have. But this last down
Yeah.
trend right here, that stair step climb downward has been, obviously, that's prices. We're seeing some stabilization right now. The last couple of days, the last week, but the whole month of February has been obviously just a crappy. It started February 2nd, so I mean we're literally almost through the whole month, because being a short month. So February has not been kind to rates. But Barry Abib, who I follow, this is the MBS Highway. He feels that we had some pain. He goes, we'll see some light at the end of the tunnel here. He goes, he believes March 10th and March 14th we're going to see some revisions on the job numbers. So it's just been really one of these, like that chart that you showed, where we're seeing this this back and forth with buyers and the buyers and sellers. I mean, we're just getting this. We might be in this for a while, because you've got the Feds now. The PCE came out today, was a little bit stronger than normal. So you wonder if the Feds are saying, hey, I was watching one commentator on this one financial news network saying that the Feds kind of put themselves into a kind of pickle now, because they've been doing these 25 basis point moves, right? But if they think that, they're saying that one commentator was saying that we want to see the federal fund rate at 6 or 7. So now you get the Feds in a pickle, Because if they do move up 50 basis points, that's going to cause a reaction because they're like, oh, well, we misstepped and now we got to bump it up even further, you know? So it's just been a real strange market. I mean, you can see, like you said, this last month, rates have gone up. I mean, we've gone from 5,996. I can't pull it up because my stupid, my
Yeah,
mouse
you're
is
feeling better, but your mouse took a dump.
I'm feeling better, but my mouse is now feeling like crap. So,
yeah,
but Jesus, my mouse has got the flu.
yeah.
Christ. But I mean, we went from 6 to about right now. I'm looking at this one lender, Next Bank out of they're a good bank out of Texas. 6 and 5/8 with a discount points of $2,700. So you're looking at basically 5/8 of a point, and I'm looking at a $500,000 loan with 10% down. Your payment has gone up about, let's see here, almost $300, $275.
That's pretty
So
huge.
yeah,
Huge
so I mean,
move.
it's nuts how somebody can't make a financial decision, like you said, in just 30 days. It's in actually 3 weeks. It's got rates of, like you said, beginning of February, and like I said, we're starting to tip. I know other retail banks are probably 7.25, 7 3/8. You're like you said, you're probably going to see the demand. Excuse me. I will say that I am still seeing good demand, though. I mean, I'm still seeing people saying, "Hey, I'm going to buy a house."
Yeah, yeah. It's not brisk, but it's a surprisingly active. Judy's asking, have vacant land prices lowered to pandemic prices? I don't know for a fact because I don't really follow vacant land, but I'm going to guess and say I kind of doubt it because not really anything has come down to pre-pandemic prices yet. So it would be safe to assume that. And Terry, sick but ruggedly handsome, according to
Thanks,
Snapchat.
Terry.
It's Chat GPT.
Yeah.
But we've had fun with that thing. This is a headline that there were headlines that came out this week, and it made people think that investors are going to start selling their houses. But all these headlines are basically saying they're buying fewer homes, but market share expected to hold steady. So the investors are buying fewer. That makes sense. Senior economist at Redfin said, even if there's a rebound in the number of homes investors purchase this year, it's unlikely to return to levels observed earlier in the pandemic, of course. And so basically they're saying, they're putting their money in other markets, and they're looking at different, parts of the country, or maybe they're sitting on their cash for a while, but it's not a panic thing. It doesn't mean that prices are going to come crashing because investors just decided not to purchase. Now the numbers came out for OfferPad and Opendoor. OfferPad lost 40 million in the fourth quarter, and Opendoor between the third and the fourth quarter. Guess how much they lost, Pat?
Which one? Which company?
Opendoor.
Let's say 250 million.
1.3 billion. You were close. Like, government
Wow.
spend.
Wow.
Keenan says, what's concerning with the Fed's action?
$1 billion?
1.3 billion. 900 million in Q3 and 400 million in Q4.
No way.
Don't worry, they'll make money soon. They only have 560
Holy crap.
listings active right now. So they're trying to get up underneath it. So, Keenan, I believe that they run the risk of over tightening. The other thing here too, and this is, I'm no grand economist, but here's what's ringing around in this little.
That's why you have me here.
Brain here. Okay. So I'm going to ask you a question.
No, just kidding.
Back in the 80s, when interest rates shot up to tame inflation, we didn't have to worry about debt.
Yeah.
Back then, I mean, our debt to GDP was,
I think it's 45%. Was it like 45%, 20 or 30%?
Yeah. Well, now
125.
125.
Yep.
So how long can the central banks keep rates elevated? And, I mean, inflation in a way helps erase debt. So I don't know if they're really going to squeeze this till they get 2%.
No, I
Sean,
think 2%.
he waits until after the show to do that. So
Yeah, wait after a show. I got asthma, so I can't smoke that stuff.
yeah,
But no, I mean, the interest cost alone, they're saying, you're talking, you look at the deficits. Like I said, this one finance guy was talking about, he's like, you're talking about 2 trillion, and it's like $330 billion in interest a year. And it's just going to keep growing. I mean, you get rates that are too high, they're going to finance that. You're looking at, it's going to be unsustainable. So that's what, you're right. I think they're battling against that also. And I think the 2% number, I like to know who came up with that number. I mean, really, I mean, I think
like,
I mean, I think, it's like a guideline. I mean, Jesus, I mean,
well, it's
I
like
think they're,
most government numbers that come out there. Like you look at FHA loan limits.
yeah,
Okay.
yeah.
What is it today?
441,600.
Why isn't it just 442,000?
441. Yeah,
It's just,
exactly.
they never just give you a flat number. It's like $446,600.42.
Yep, yep. So, I think the Feds are kind of getting themselves in a pickle though. Like you said, now I mean, if they, Barry believes that the employment numbers, are fake. There's just a lot of seasonal. They do all these adjustments. It's the seasonal adjustments and you always see these revisions of 1 or 2 months later. So he believes that employment numbers are not really as strong as they look to be. So he thinks they're going to see some backing and filling with rates here. He said we got to get through this pain, and eventually he said we'll come out of this thing here in the next couple months. He thinks the next 30 days, 40 days, we'll see a little relief in rates. So what is that? If we do see relief in rates, though, what does it do with demand then?
Well, we're sitting here at 3,200 every 7 days, and it's been kind of stuck there. If we do see a reduction, let's say we're back down to 5.9. Okay.
Mm-hmm.
There's Jessica. That's our partner in crime in the East Valley. Welcome. We're going to have you on this show. You know that. So,
Jessica.
she is with Agave.
Yeah, she got her own brokerage firm.
Right here, Home and Investments LLC. So she is going to be my referral partner in the East Valley when I'm out of town. She really knows her stuff, guys. So, in fact, Mandy, I think I sent you some stuff from her this afternoon. So, anyway, like anybody knows who that is, right? So you can't wait. Yeah, it's going to be fun. I think, you get down to 5.9, and let's say we realistically do that again. You're going to see inventory kind of start to come back up, I think, a little bit. Will sales chase it? Probably. Go from 3,200 to maybe 3,400 every 7 days. And will it have much of an impact on pricing? The thing here is that right now we're seeing list pricing really kind of hang there. And again, this lags a week. So can't wait to see what happens to this in the next 2 weeks, because you can see that the rate of ascent is just barely different here. So this list pricing continuing to go up this year, which is surprising to a lot of people. But again, I caution you, there is a lot of seller concessions behind that number as well. On average, 9,900. So it's people are asking more so they can give more. I did get a question today. A gentleman said he had a home that he built up in North Scottsdale last December. He sold it for 1.2 million. He's got one now that's roughly the same size, but on more property. He asked me, do you think I'd get away with listing it for 1.3? And I said, well, I don't know a whole lot about it, but he said he sold the one for 1.2 in December of 2021. And I said, well, we aren't at that price yet, that pricing level. We're getting close.
Mm-hmm.
December 2021 would be right here, but that's Christmas week. So let's go down a couple weeks here. They're 340 square foot versus 354 now. So we're almost there, but not quite. And that's
Mm-hmm.
just
Mm-hmm.
flying over at 30,000 feet and going, well, you could look at it this way. So I don't think he's way out of line by going up $100,000 versus the sales price from December. But, you don't
Yeah.
know until you list it.
Yeah. Exactly right. Exactly right.
So,
But it's just weird. I just, this popped in my head. That there's a train running through my head. There's always that little train that runs through my head.
yeah, I'm
Lots,
getting a
lots of little
visual.
trains. Lots of little trains running through the head. But I just stepping back and looking. Everybody's trying to, try to diagnose this market and what's going on. But you look at what we had in, 19 and 20 and 21. We had this rise in 21, and obviously 2022. We had some falling off, but it just seems like this whole year. I think I've said this a couple of times, and it's just kind of I'm trying to gather up a theme for this year to see what the hell's going on. But it just seems like we're going to be muddling around here. I mean, the
Well, maybe
Feds don't really know the Fed. What I mean? It's just we got this. We're gonna have I think we're gonna be in this herky jerky market this whole year. That just kind of came over me, but I just think that it's going to be. There's no rhyme or reason, would you say, for this? We get 1 month where it's demand, and then all of a sudden you got kind of sliding off, and the demand picks up. It's just there's this kind of this back and forth. Does that make sense?
Yeah, and I think of what it is that there's people that just want to get out of their leases, and
Yeah.
they're very frustrated that they can't. And when they
Yep.
see a window of opportunity, they get in, and they get in as a bunch of bulk buyers.
Yeah.
Because and then we went from this period where in December and early January you could go out and look at a house, and you could go home and sit on it for a few
Yeah.
days, and then all of a sudden that went away in February, and you're like, damn it, it's coming back,
Yeah.
and and then in February, here we go. You see a listing. Yeah, let me make an appointment for Friday, and Thursday you get an email that that it's, or a text that it's under contract,
Yeah.
and so when you watch the rates start to climb, you start thinking, okay, that's probably going to go away again. That'll be a good thing. But yet the costs are higher. And are there people that are really resigned now to say, I'll go ahead and bite the bullet now because I feel like rates will be lower later and I can
Mhm.
refinance? Maybe that's some of that. Um,
Yeah. I just ran the numbers for a guy, 675,000 purchase. Sorry for my damn voice. 675,000 purchase at 6.25. Okay, he was gonna maybe use a buy down to get 6 or 7,000, so he could probably get 6.25 based on $6 or $7,000 in permanent buy down. But then I said, well, in the future, his payment was gonna be like 38, 60 or 38. I had the number here, and where is it? Um, $3,800, and let me see here. Yeah, uh, 38.43 on 675 at 6.25. But if rates go down to 4 5/8, he drops his principal to 32.13. That's a 600 almost $50 difference
yeah,
from
that's
six and
huge.
a quarter. 6.25. He goes, that's a lot of money. He said, and I just was not trying to set him up. I'm saying, hey, if rates do come down here in maybe the high fours, let's say, I was being, maybe dreaming right now, 4 5/8. But, if we do somehow, Barry Beebe thinks that we will see rates eventually taper off here down the road. It could be another 12 months out, but, that's a $650 a month difference. That's huge.
Well, I don't see anything that, but you see the numbers better than I do. But I don't see anything that's telling me that rates are going to go. I'm catching your cold over here.
Yeah, no shit.
How does refinancing work if you don't have equity, assuming prices drop? Well, that's the big question out there. But
Well, I mean, yeah, I mean, if prices do drop. I mean, based on what you and I are talking about, I mean, do we see that crash? I mean, we're going to see maybe some softening, but there's still a lot of demand out there. There's people in the woodwork, behind the scenes that are looking to buy, like you said, getting out their leases. And if rates do, I just don't see it. I'm until you can only go with the information what you've got today to make a decision.
Yeah, I mean, you can bounce around different scenarios all you want. Like okay, let's say rates really went down, and you're an opportunity to finance, but prices have gone down 15%. Well, if rates stay down, well, prices might jump up another 5 or 10. And then you're
Yeah.
back where you were. So, but you can speculate yourself into the oblivion there. So, Pat, Terry wants to know how many points for a 3-2-1 buy down.
It depends on. There's a calculator. From what I've seen, it's typically it's not. I mean, usually a 2-1 buy down has been running on a $450,000, $500,000 house. It's about $9,000-$10,000. So I think a 3-2-1 will probably be in the high, teens. I could run a calculator. I don't have it off the top of my head, but it's probably in the high 17, 18,000. 3-2-1 buy down doesn't seem as popular because you're stretching out. Yeah, you could, you typically don't get that much in seller concessions to use it to be able to do a 3-2-1 buy down. You're getting enough, these seller concessions are typically coming in around $10,000 or so, let's say $8,000 to $10,000, which is enough to do a 2-1 buy down. And really, quite frankly, with the interest rate scenario that we're at, 2-1 buy down should be sufficient enough to basically, ride out this, this interest rate, hopefully this, this last, this rise in rates.
Well, it works better if you can get the sellers to help contribute towards it.
Well, that's the only way you can. I mean, there's very few lenders that you have to have the seller do the 2-1. They have to contribute. That's what they have to contribute that. But I haven't done a 3-2-1. I've done 2-1 buy downs. I think 3-2-1, you're stretching it out for 3 years, and I think within 2 years, a year to 2 years, you're going to see, based on what I, following Mr. Barry Habib, that he feels that we're going to see lower rates. So I think that's the 2-1 buy down. I think, quite frankly, is sufficient enough for somebody buying a house. I think 3-2-1 is kind of overdoing it. If you're getting seller concessions, you could just do a permanent buy down too. Using that money for a permanent buy down, because at 3-2-1, those are temporary. You could do a permanent one also. So hopefully that makes sense.
It gets confusing. For me anyway. I think next week I'm leaving tomorrow morning, going to Rocky Point, and I'm actually going to make a video on the whole experience while I'm down there, just for people that don't know what it's like. And if I get
inside a Mexican jail,
if I get pulled over, you'll see it.
See the transaction happen live.
Yeah, that's right. Is that camera on? So no, like Ruby said, she told us the other day that her her husband were driving through the first town when you cross the border, and the name escapes me, but she said they were going, the speed limit, 20 kilometers, and they got pulled over. And he said they're giving him a ticket for going too fast over a speed bump.
Yeah.
Like, how much? $200.
And they gave him 20.
They gave him 20. So we'll see. And watch out for whether it looks like hurricane here in LA. I've seen that, but it's going north. So that looks rough. It looks like down there it's going to be just like here in Phoenix. It's going to be pretty steady. And Scottsdale did drop a lot on that list. Yeah, they're talking about the CMI index. Scottsdale did drop, and they're more geared towards high-end fluctuation because of the stock market. So I do have a listing coming up there between March 3rd and March 5th. But I might be back here next Friday, Pat, for us. I'm coming back Friday morning next week, so we'll see what happens. I'll see if I can connect while I'm down there, and see if I can at least do a few updates. But I'm
live report from the Rocky Point jail, Mexican jail.
That's right. Yeah, I'm going to try and dress appropriately. So
yeah.
Yeah, that'll be my first request instead of, can I make my phone call when
Do I
they
get
lock
internet?
me in?
Guys, you have internet
No
connection?
Wi-Fi?
Do you have Wi-Fi? I got a show to do.
I can't stay
I
here.
can't.
Oh, shoot.
Oh God.
All right, Pat. Well, I'm gonna let you go before you hork up a lung,
Yeah.
and appreciate our millions and millions of viewers once again tuning in. And
Yeah.
hopefully
Thank
we'll
you.
get to see you again next week. Take care.
All right. Have a good weekend.